Welcome to Furniture Industry News. Today is March 12th, 2026. I'm glad you're here. This is your quick industry update where we step back for a few minutes and look at the trends, numbers, and stories shaping the furniture business right now. There's a lot happening across the industry this week, from shipping disruptions and product trends to retail traffic, supplier performance, and even a reminder about something surprisingly simple that can influence customer perception inside stores. Let's start with the global supply chain because that continues to influence pricing, inventory, and planning for many furniture companies. A new report shows that containerized imports into the United States declined in February compared to both the previous month and the same time last year. Total imports came in at just over 2 million 20-foot equivalent units. That represents a drop of about 9.7% from January and about 6.5% compared with February of last year. Now, before anyone assumes this means demand is collapsing, the data suggests something different. February tends to be a softer month after the post-holiday shipping push in January. In fact, despite the decline, this February still ranks as the fourth strongest February on record for container imports. Volumes are also about 17% higher than they were before the pandemic. But the bigger story is risk and uncertainty across global shipping routes. The conflict involving the United States, Israel, and Iran is raising concerns around key maritime corridors, particularly the Strait of Hormuz and the Red Sea. Commercial traffic through the Strait of Hormuz has effectively stopped following military strikes and retaliatory actions, which has triggered security warnings and caused shipping lines to rethink routes. Some carriers are now rerouting vessels around the Cape of Good Hope instead of moving through the Suez Canal. That change significantly lengthens shipping times and increases fuel costs. For furniture retailers and manufacturers, that could mean higher freight costs and longer delivery windows. Looking specifically at imports from China, which remains the largest source of containerized goods entering the United States, volumes totaled just over 728,000 TEUs in February. That's down 5.5% from January and down more than 16% compared to last year. Furniture and bedding continue to represent the largest category coming from China. That segment accounted for about 122,000 TEUs, or roughly 16.9% of China-origin imports. But even there, volumes were down more than 18% year over year. At the port level, most of the major U.S. gateways saw declines compared with January. Los Angeles was the only major port that posted a monthly increase, while ports like New York and Long Beach saw larger drops. Despite all that, port operations themselves remain relatively stable. Transit delays have moved up in some locations and improved in others, but there are no signs of widespread congestion right now. So, while import demand appears steady, the operating environment is still being shaped by geopolitics, shipping routes, and changing trade policies. And speaking of trade policies, tariffs remain another moving target. A recent Supreme Court decision invalidated a portion of earlier tariffs imposed under emergency powers, which could open the door for some importers to seek refunds. But at the same time, the government moved quickly to replace many of those duties using another section of the Trade Act. So, in practice, the cost burden for many importers hasn't changed very much yet. For companies importing furniture and home furnishings, it's another reminder that the rules of global trade are still evolving. Now, shifting from shipping to product trends, executives across the furniture industry are starting to share what they're seeing as we head toward the spring high point market. The big takeaway right now is that there isn't one single dominant style driving the market. But there are some clear themes. Soft transitional furniture remains strong, particularly pieces with tactile fabrics and comfortable silhouettes. But some executives believe that category may be approaching its peak. One emerging trend is something often described as neo-traditional design. That includes more visible patterns, richer colors, and details like trims or decorative accents. At the same time, neutrals are still dominant, but they're warming up a bit. Instead of cool grays, designers are leaning into layered beiges, soft taupes, and camel tones, often paired with textured fabrics rather than smooth surfaces. In terms of product categories, sofas and sectionals continue to lead demand, especially fabric sectionals and power motion reclining furniture. Consumers seem willing to spend when the perceived value is clear. Right now, the most active buying range appears to be between $1,000 and $2,500. At the higher end of the market, there's growing demand for customization. Buyers want options in size, color, fabric, and features, so the product feels more personalized. Another theme executives mention is authenticity. Sculptural shapes, organic silhouettes, and materials that feel natural or tactile are gaining attention across multiple brands. While styles evolve, many industry leaders believe the broader operating environment is what has changed the most over the last several years. One executive recently described the furniture industry as operating in a permanent state of disruption for about 6 years now. Starting with the pandemic, companies have had to deal with supply chain breakdowns, raw material inflation, container shortages, tariffs, geopolitical tensions, and now shifting global demand patterns. That constant change has exposed structural weaknesses in some businesses while rewarding companies that focused on operational efficiency and cost control. For example, companies with vertically integrated manufacturing have more visibility into costs and more flexibility when conditions shift. Controlling processes like foam production, frame building, and upholstery assembly can make it easier to adjust quickly when supply chains or material costs move. Even with all the disruption, though, there's still optimism about long-term demand. Furniture demand has historically been tied more closely to housing activity and lifestyle changes than to population growth alone. When homes are built, sold, renovated, or rented, furniture purchases tend to follow. There's also a massive transfer of wealth expected to occur over the next couple of decades as younger households inherit homes and financial assets. When that happens, those spaces often get remodeled, redecorated, and refurnished to match new tastes. So demand may evolve, but it's unlikely to disappear. Now let's look at how suppliers are navigating the current market. Fabric supplier Culp recently reported its latest quarterly results, and while sales declined, the company's losses narrowed compared to last year. For the quarter ending February 1st, net sales were just under $48 million, down from about $52 million in the same period last year. But the company's net loss improved to about $3.4 million compared to more than $4 million a year earlier. Leadership says restructuring initiatives are starting to pay off. Through the first 9 months of the fiscal year, net losses totaled just under $8 million, which is a significant improvement compared with more than $17 million during the same period last year. Demand conditions remain soft, particularly in bedding and upholstery fabrics. Bedding sales declined about 5% year over year, influenced by severe weather at the end of the quarter, consumer uncertainty, and a weak housing market. Upholstery fabric sales dropped roughly 12%, partly due to slower activity in commercial and hospitality segments. However, the company did see growth in higher margin categories such as sewn mattress covers and upholstery kits, which leadership views as important growth areas. Now moving to the retail side, there's also a bankruptcy situation worth watching. American Mattress, a bedding specialty retailer, is currently in Chapter 11 bankruptcy. Some of its stores have posted signs indicating temporary closures, and the situation could shift toward liquidation. The committee representing unsecured creditors has filed a motion asking the court to convert the case from Chapter 11 reorganization to Chapter 7 liquidation. Creditors argue the company has not made meaningful progress toward restructuring and continues operating without a clear financial plan. The U.S. trustee has also raised concerns pointing to unpaid rent obligations and operating losses of more than $1 million since November. The company disputes those claims and says it has received an offer from a buyer interested in purchasing its assets. Leadership plans to file a motion seeking approval of that sale as part of its strategy to exit Chapter 11. So the final outcome there is still uncertain. Meanwhile, the broader retail environment has shown some positive signals. Retail sales in the United States increased again in February, marking the 5th consecutive month of growth. Core retail sales rose slightly from January and were up more than 6% compared with February of last year. Furniture and home furnishing stores saw a small decline month to month, about 0.27%, but sales were still up roughly 3% compared with the same month last year. Retail leaders say steady wage growth and relatively low unemployment are helping support consumer spending, even with economic uncertainty in the background. And there's another encouraging sign for physical retail. Mall traffic is starting the year strong. Data from Placer shows visits increased across all major mall formats in February. Open-air centers led the way with about a 7.3% increase year over year. Outlet malls followed closely with about 7.2% growth, while indoor malls saw visits rise about 5%. Outlet malls have been particularly active during evening hours, with traffic in that period rising by about 10% compared with last year. For furniture retailers operating in shopping centers, that kind of foot traffic could translate into more showroom visits as the year continues. Finally, there's one small but interesting piece of data that retailers may want to think about. A recent consumer survey found that nearly 70% of adults say they will intentionally stop at a business they know has clean restrooms. About 60% say they are more likely to spend money at those locations. Even more interesting, about 40% of people say they sometimes check a store's restroom before deciding whether they want to stay and shop. Most consumers also expect businesses offering high-quality products or services to maintain well-kept restroom facilities. It's a simple reminder that the customer experience doesn't start and end with merchandise. So, stepping back, what does all of this mean for the furniture industry right now? Supply chains remain unpredictable. Tariffs and geopolitics are still influencing costs and logistics. Product trends continue evolving as consumers focus on comfort and authenticity. Suppliers are restructuring and adjusting to softer demand, and retail traffic is showing signs of improvement. In other words, the industry isn't standing still, it's adapting. And that has always been part of the furniture business. If you enjoy these updates and want to stay informed about what's happening across the furniture industry, be sure to subscribe so you never miss an episode of Furniture Industry News.